Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic is doing a quarterly check-in. We're going to talk how to kind of clean up and manage your bookkeeping and tax and keep it on track on a quarterly basis instead of scrambling at year end to take care of all of that. So again, why is this important? We talk about this pretty regularly on here. While it's important to keep your accounting and your bookkeeping up to date on a monthly basis, at the least, if you're not doing it on a monthly basis, you really do want to do it on a quarterly basis. Gives you the opportunity to kind of look back at a shorter period of time, allows you to make better decisions over a shorter time frame instead of scrambling at year end, which we see people do far too often. And at that point, now you're trying to, in some cases, remember things that happened in your business more than a year ago so that they can get captured correctly. And of course, it's really hard to make any kind of real tax planning, do any of that if you're waiting until year end and after the year has ended to kind of update and keep your accounting and your bookkeeping up to date. So it's really, the main reason why it's so important. And, if you look at your accounting and your bookkeeping, like any of the projects that you're working on, if you're building a house, you don't go to the project on day one and then don't go back to the project again until the last day, right? You could spend 6, 9, 12 months building a house, or a commercial building or whatever it is that you are building. You wouldn't just look at it on day one and then the last day. You're actually going to go on and check on your project on a regular basis. So you really want to look at your accounting and bookkeeping in the same way. You want to be interacting with it and keeping it up to date to ensure that you ultimately get the final result you want. Same as when you are doing any kind of projects that you're doing, any building that you're doing. So, why do you want to do this? Why does it matter that you do this on a quarterly basis? Nobody wants to be overwhelmed at year end and try and do 12 months worth of accounting and bookkeeping all at once. It's a lot easier if you aren't doing it monthly to at least do it every 3 months. It gives you the opportunity to spot any problems that you may have. Are there opportunities for things to do, save money, improve on projects, whatever it is? Again, it gives you the opportunity to see things a lot quicker than, again, actually going and working on it after year end and seeing what your results were a year later. And the last thing, and tends to be the thing that a lot of people think about, and they think about tax time a lot, but it does make tax time a lot easier. It can also make it potentially less expensive, right? So you're putting less pressure on, if you're doing it internally, your bookkeeping and accounting, it puts less pressure on the person who's doing it for you internally. Also less pressure on your outside tax preparer. If you're trying to kind of put all the books back together 12 months later, it's a lot harder on all parties who are trying to ultimately get you to that final tax return to be able to get you the result that you're looking for. So again, it does matter that you at the least are keeping your accounting and your bookkeeping up to date on a quarterly basis. So what should you actually be doing on a quarterly basis, right? So what are the things that you really want to do? So kind of high level. First is you're going to do any kind of bookkeeping, cleanup, and catch up work. Second, you're going to review the financial information and any of your reporting. Third is you're going to look at your estimated tax payments. The fourth, payroll compliance. That is a very big deal. You want to make sure that you are filing all the proper payroll tax reports. And then the last thing is it actually gives you the opportunity to do business planning and make any adjustments. So, what does, kind of, let's dig into those 5 things just a little bit deeper. If you haven't been doing your bookkeeping at all, now's the time for you to catch up on what you haven't done for 3 months. So you might be trying to do 3 months worth of accounting, or you may have done some level of accounting over that 3 months, but now you've got to go back in and kind of clean it up, fix it, make sure things are in the right place, because you want to make sure that your items are recorded in the correct place, not only for tax purposes, for tax planning purposes, for financial results purposes. Again, you want to make sure your revenue's in the right place, the costs for your projects are in the right place, your operational expenses are in the right place. So again, it gives you a better snapshot of where you are. And then once you've done all that bookkeeping and that catch up work, what do you want to do next? You want to actually review those financial statements. You want to review that reporting. You want to look at that profit and loss statement. Maybe you're going to look at your balance sheet to see, do you have receivables outstanding at the end of the quarter? Excuse me. Who owes you and how old are those receivables? On the opposite side of it, do you have payables? Do you owe money to people? And again, how old are those payables? Do you need to, have the cash flow right away in order to pay them? Again, you want to look at your results. You want to look at your projects also. So what happened over the quarter in the projects that you're working on? What are your overall business results for that 3-month time frame? Once you've gotten all of your accounting is up to date, you've reviewed the reporting, you have ensured that things are in the right place. Now, for most of our clients and most of the businesses out there, you're going to be, need to do some type of estimated tax payments. If you're a pass through, you're going to want to look to see if the owner or the owners will, in fact, need to make any kind of estimated tax payments. So you're going to take those actual results. And in our case, we take the actual results and we run an estimated tax calculation. What do we think the client is going to potentially owe at year end? Do we need to make an estimate? If you're a C Corp, you want to do the same thing. That C Corp may potentially have a tax liability. So you're going to want to run an estimated tax calculation on that. And again, make any estimated tax payments, right? So that's another reason why doing your quarterly accounting is so important. Another thing that if you aren't using a payroll service, which you should be, but if you're doing it internally yourself, are you compliant? Are all of the forms being filed? Have all of the tax deposits been made? If you are using a service, most clients do use a service. We recommend most people use a service. We don't recommend that you do it internally. It's a lot of deadlines to keep track of, a lot easier to utilize a service and take that piece off of your plate. But again, has everything been filed? Have all of your tax deposits been made? Have all the quarterly forms been filed in a timely basis? Again, those are the little types of compliance things that you want to just keep track of. Because if you do fall off, for example, if you do get behind in making your payroll tax deposits, it could get quite expensive for you. Those types of things do incur penalties and interest very quickly because they're considered what's called a trustee tax. Basically, the money was never yours. It was always meant to be the government's. So you want to make sure that you are compliant with that. It's a very easy way for you to fall off the wagon and things to get very, very expensive really, really quickly. And then the last thing is, what are your plans in your business? What are you expecting to do over the next quarter or 2 quarters or the year? So you want to look at the prior quarter, the prior 3 months, and see if there is something in your plan that you want to change. Now is an opportunity for you to make that adjustment moving forward for subsequent quarters. So again, it's important for you to kind of keep that accounting up to date on at the least a quarterly basis, because what is happening or that inability to keep it up to date really stops you from doing a number of other things which are quite important in your business. So what are some of the tasks that you need to absolutely tackle when you are making sure that you're updating your bookkeeping and your accounting at quarter end, right? So what are you going to do? You're going to reconcile all the accounts. That's going to be your first thing. You're going to want to make sure that you categorize all the transactions, everything that processed in and out of your accounts. The next thing is you want to tackle your receivables and your payables. Who do you owe and who owes you? And then the last thing is clean up any kind of old entries, old information that isn't accurate anymore. And it gives you a chance to kind of go back and, as we call it, clean up, kind of clean it up and make it prettier, right? So let's dig into those kind of tasks a little bit deeper so that you understand exactly what does that mean. So when we say reconciling all accounts, you want to take all your bank accounts, your credit card accounts, and any of the loans or debt that you have, and you want to ensure that you've accounted for in the bank and credit cards all of the activity coming in and out, dollars coming in and dollars going out. So you're reconciling the balance on that statement at the end of the month to what you have recorded in your financial statements to ensure that you have, in fact, captured everything you should have. Same thing with your loans. Are you making your monthly loan payments? So, are you up to date with the loan payments and you want to ensure that you reconcile your loans out to the statements that you get from your either your bank or any of the financial institutions that you use for any of the borrowings that you have? It's incredibly important. It is crucial because you want and need to be able to catch any errors early. Are there transactions that did not get accounted for? Right? You want to make sure you grab them. Are you forgetting to include expenses in your business? If you aren't reconciling your cash and your credit cards, you in fact might forget to make transactions and forget to record those. And those are the types of things that you don't want to lose out on potential expenses because you didn't reconcile the accounts to ensure that you had actually caught everything. Next, you want to make sure you actually categorize all the transactions, right? You don't want to throw all of your expenses into, let's just say, miscellaneous. That is not where they go. You want to make sure that you create a level of categorization with that, right? So, excuse me, when we're talking about the actual costs related to projects, you don't have to get deep and really detailed in the reporting, but let's break it out between labor and materials. I mean, the big ones. Any other like miscellaneous job related expenses, right? You've got two or three large categorizations there, and that's just under the costs associated with your projects. Then you want to take, again, all your operational expenses. Are you Most businesses were utilizing a level of software and in our businesses now, right? So, are you coding your software expenses to the same line item? Your rent, your insurance, right? Any of those other expenses, you don't want to just call them miscellaneous. It also becomes a challenge too. You definitely don't want to put everything in miscellaneous and then put that on a tax return. That way, that's also a very easy way for you to potentially have your return pulled, especially when you have too much expense on miscellaneous. So you want to make sure you've got some level of detail. Again, it doesn't have to be crazy detail, but you have to have a higher level of detail in breaking out your costs to manage your projects and then your business's operational costs. We in our business use QuickBooks. Most of our clients, I think all of our clients are on QuickBooks. It is not the only product out there, but again, you want to be on some type of accounting product. So QuickBooks or Xero or something like that, Sage Business, one of those types of products. And again, there are tons of them. Those are just a couple of them that, off the top of our head in terms of more popular products that people tend to use. But again, there's tons of products out there. Utilizing those products and doing it properly will absolutely help you to categorize your transactions a lot more carefully. You want to track your receivables and payables. Who hasn't paid you? Right? How old are those receivables? Why haven't they paid you? Are you following up with those individuals? So it gives you the opportunity now on a quarterly basis to look to say, who owes us money? How old is it? And what are we doing to collect it? On the other side of it, do you owe money to someone? How old are those payables? When do you need to pay those expenses, right? So you want to, excuse me, make sure that, again, you've logged all your receivables, all of the invoices for all the work you've done has been billed out and has been logged properly. And then on the other side of it, all of the expenses you've incurred that, what do you have? They all been logged? Who do you still owe money to? You want to make sure you've got an accurate listing of, again, your receivables, who owes you, and your payables, who you owe money to. And then now that you've done all of those high level things, now you're going to go in there and really dig into your books a little bit deeper, right? So do you have receivables that could potentially be written off? Someone is not going to pay you. You have no chance of them ever paying you. So now here's an opportunity for you to potentially write that off if you don't think you're going to collect it. It gives you the opportunity in your accounting system to do things like closing out old accounts or making vendors inactive, or maybe if you're doing something like consolidating your cash accounts, you're recording those all appropriately. So once you've done those high level tasks, now you're going in there and you're just kind of cleaning things up a little bit, making it a little bit neater. And so you've got a better set of final books that you can use, again, to do, other things, your business planning, making tax estimates and things like that. You do want to, one of the things we do recommend, especially if you are doing the work internally or you're having a team member doing the work internally, make sure you allocate enough time to doing this quarter end review so it isn't overwhelming to you. So allocate 2 to 3 hours a month for you as the owner to kind of review all of this to ensure everything, again, is in the right place. Have the items been reconciled and so on and so forth? Are we compliant with this and that? So that you're not trying to jam something into your month or your quarter end that you just don't have time for. So let's talk a little bit about your financial review and kind of doing that health check at the end of the quarter. What is it you're going to want to do? The first thing you want to do is you're going to run your reports. Next thing you want to do is you review your margins. And the last thing is you're going to want to compare it at least to the last quarter. If not, maybe that same quarter in the prior year. Gives you a chance to kind of look to see where you are compared to other periods. So what exactly does it mean when I say run your reports? You're going to pull a profit and loss statement for that quarter. Maybe you're going to pull a statement for each of the months of that quarter and then an aggregate of just the quarter. It gives you the chance now to look at what's going on in that quarter. You're going to pull a balance sheet for that quarter end date. Where are you on the last day of the quarter? How much cash do you have? What receivables do you have? What payables do you have? Those are all things that you're going to want to see in that reporting. And then the last thing is you're going to want to run a cash flow statement. Where has your cash ebbed and flowed in and out of the business over the last quarter? So these financial reports, these 3 financial statements, which are your key ones to look at, are going to be what you want to see kind of for that last quarter. What's going on over the last 3 months in your business? So the next thing you're going to do is you're going to review your margins, right? What is the gross profit on your projects? What is your gross profit in aggregate over all of your projects? Are you in line with industry? Are you off? Where are you off? Are there things that you, in fact, can fix if you are off? Again, it gives you that, excuse me, it gives you that opportunity to see exactly where you're at individually on projects and then the aggregate in all of your projects together for the entire quarter. Is there anything unusual in any of your project? Is there anything high? Is there anything lower than you thought it would be? Now's the time to look at that, analyze it, see if you have a problem. And if you do, it gives you the opportunity to potentially fix it. And then the last thing you're going to do is you're going to compare your results against past quarters, right? What are your trends? How have you historically trended quarter over quarter? So how did you do the last quarter? Excuse me. How did you do, for example, if it is the second quarter of the year, how did you do against the first quarter? If it's the second quarter, how did you do against the second quarter in the prior year or the year before that? So are there trends? Do you historically see specific types of results over the second quarter versus, the first quarter? And so you're looking at not at just one thing, you're looking at a couple of different variations of it and looking for kind of some historical trends to see if you're trending where you historically do. If you're not, again, what has changed in the business? Are there things that you can fix, overall? One of the things that kind of, we'll call it a pro tip, is you want to use this information now to potentially adjust any of your pricing, any of the ways that you move forward in any of your bidding moving forward, right? What are your budgets on these projects going to be? This is where now you have the ability to learn from those other projects, and then it will speak to how you bid and you quote moving forward, because now you have the ability to take solid, relatively accurate, recent information and make adjustments on that. So it gives you a chance to alter your strategy before it gets to that corner, we'll call it that too late period. So let's talk a little bit about estimated tax payments and the compliance, because that is important. That is something that you're going to want to take care of on a quarterly basis. It's just as important as doing your accounting and your bookkeeping. So what are you going to need to do? You're going to need to pay your quarterly estimated taxes if it is required for you. You're going to want to review your payroll tax filings. Did everything get filed? And then the last thing is double check your contractor payments, right? That's a really important thing in construction because your contractor, your sub payments tend to be a really large driving force and a huge expense in your business. So you want to make sure, again, do you have the information that you need, right? So, let's talk a little bit more about your quarterly tax payments. We've talked about this on here before, but again, just to reiterate, the quarterly tax payments are due 4 times during the year. It doesn't fall exactly at the end of a quarter. So your quarterly tax payments are going to be due April 15 for Q1, June 15 for Q2, September 15 for Q3, and then January 15 of the next year for Q4. So it doesn't, again, fall exactly on the quarters, excuse me, but you need that quarterly results in order to build out the estimates that you need to potentially make. Not everybody has to make them, so it's just something to think about, but most on some level have to probably make some type of estimate, especially if their businesses are profitable. Penalties and interest, you can incur that at year end if you aren't making your estimates the way that you should be. So, if you want to avoid penalties and interest, you want to stay on top of doing your quarterly tax payments. Again, we've run into clients who have different philosophies on whether or not they actually are going to make their estimated tax payments. Some will live with the penalties and interest at the end of a year in order to have the cash flow throughout the year. Again, just be mindful that if you would at least want to make the estimated tax calculation so you know, in fact, what the number should be. If you are not making those payments, the actual sending of the money in, you just want to be mindful that you will most likely incur some level of penalties and interest at year end. So it does cost you something to hold on to your funds. Review your payroll tax filings. Most clients are using a payroll service. Even if you are, you want to make sure that you go into your payroll services portal, ensure that everything has been submitted. Excuse me. Your tax deposits have been submitted. Are all the figures accurate? Do they tie back to the reports for each period and so on? Again, has everything that was withheld from employees' payrolls been remitted properly and timely? Those are things that, if they are not done appropriately, could get costly to you down the road. And the last thing is you're going to double check your contractor payments, right? You want to keep on tab of the subs that are ultimately going to need a 1099 at year end. So are you getting a W-9 from them when they start working for you? Do you have an accurate W-9 for them? To determine, again, whether or not you will, in fact, need to file a 1099 for them. But are you getting that W-9? And for those of you who are in construction, you're also wanting to get a certificate of insurance from them so that you can have any payments made to them taken out of your own workers' comp calculation. So it's good business to ensure that you are, in fact, getting all of those documents prior to your sub getting that first payment from you. Are you getting that W-9? Are you getting that certificate of insurance? So you have it all on file. So when you actually go to make those payments you go to do the compliance filing at the end of the year, you in fact have everything, you have everything in hand at that time, and you're not going back and having to chase that information. It does get hard to try and chase that information at year end. So let's talk a little bit about your strategic adjustments in your business planning, right? So now you've taken this accounting. What are you doing with it? You're potentially doing, more business planning, or you're making adjustments to the planning you've already done, right? So adjust your budgets based on performance, right? Are you hitting your revenue targets? If you are not, what in the rest of your financial plan needs to change? Are you reviewing your job cost data? Again, we talked about that already. What projects did you work throughout the quarter? Are your costs associated with them all accurate? Have you billed out everything you could potentially bill out, right? Are you doing certain types of work that's more profitable than others? So it actually gives you the ability to look at that work and say, oh, this is not profitable for us anymore, or is not profitable at all. And so should we not be bidding on this work any longer? That's probably the case. So it gives you, again, the ability to make real business decisions based on that information that you have. And you can make operational shifts at that point, right? Are there things that you're doing in your business that, excuse me, don't get you the ROI that you wanted? Do you need to hire people because you're expecting certain things to happen over the next quarter based on things that happened in the prior quarter? Do you need to buy equipment? Are you getting to that point where renting the equipment doesn't make sense anymore? Now we need to buy it. Are we moving from a very active, busy season into a slower season? And therefore, do we need to be allocating funds to the side in order to help us get through that subsequent slower season? That might be the next quarter up. Those are all things that you, if you've done your accounting and you've at the least maintained that information on a quarterly basis and you have that info through this last final quarter, you can start to make decisions like that. If any of you have any questions on anything that we talked about today, we would love to hear from you. Please drop any of those questions that you have in the chat. Just as a quick recap, your accounting is not glamorous, but if you at the least maintain your accounting on a quarterly basis, you have good, solid financial information to make decisions off of. And like anything else, this is the foundation that you need to build your more profitable and solid business on. You've got to have that financial information as accurate and up to date as possible. We always love to see you here every Friday. Feel free to follow us on YouTube and Facebook and Instagram, and we're at The Construction CPA on all the various channels. Again, please feel free to drop any questions in the chat. We'd love to hear from you. As always, I look forward to seeing you here every week, and we'll see you next week.